The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
And our stock of the day is Westpac. Its net profit fell slightly for the year because of higher operating costs and more competition for loans. Net profit coming in at $6.92 billion for the year to the end of September. That's down 1% on the prior full year and just ahead of analyst expectations as margins improved in the second half. But competition did squeeze net interest margins there by 1 basis point to 1.94%. Revenue rose by nearly 4%, but a 9% rise in operating expenses hit its bottom line. Did raise its final dividend 1 cent to 77 cents, will pay a fully franked full-year dividend of $1.53. And it's also sold its $21.4 billion RAMS mortgage portfolio to a consortium including KKR and PIMCO. So let's get to the expert opinion. And stock, well, that was well received by the market, up some 2%. Mathan, how do you see it?
Who needs fundamentals? Give me a flow story. Look, the bank, Westpac is pretty much trading at all-time high. Yeah, it's not that good. It's just the flow, right? It's in the banks. All the banks are trading near all-time high. They're paying you less than 4% yield. So you're buying a growth stock? No. You're buying a yield stock? No. You buying pain? Yes. So if you're there for a long time. Tax, you're never going to sell. That's fine. If you're buying fresh, I think you're buying probably the peak. Time will prove that. Unless if you think that we can afford to get a property market another 20% in the next 12 months. Look, it can be done, who knows. But unless property market's going to run again hard, the banks are not doing that well. The banks are trading at a multiple, all of them, at a multiple that they just don't hold, right? And as we discussed before, CBA always get a premium because of the size and the quality. Right? I don't agree with it all the time, but it is what it is. So you're buying the next bunch at all-time high. And I'm talking about all-time high. It's not Aristocrat, right? You're buying a bank. So do what you want. I'm staying out of the banks.
But if you're there, just hang on.
If you're there,
it
comes down to tax, right?
Yep.
So I would say you gradually reduce because you got options, other places where you could get better returns and better total return. Always think of total return. And the other thing I always tell my clients is, if you're paying tax, it's actually a good thing, because if you're paying tax, you're making profit. People, so many people, I watch them hold it all the way up and then hold it all the way down. I didn't pay tax. Yeah, but you lost money. I'd rather pay tax and make money than lose money and not pay tax. It's not genius work, but yeah, it pays.
Like my cricket coach said, nothing wrong putting runs on the board, Zach.
Exactly.
Don't just occupy the crease. And look, we're neutral on it. Echo a lot of what Mathan said. And really, it's really got to be something around positive catalyst, the cost base. That's just too big of a cost base to move around or anytime soon. Again, my earlier point, these guys are now starting to do the technology spend, which CBA did ages ago, and I think the recent update today was also suggesting that there's going to be a bit of an uplift in that technology led. The bright spot really honestly is just, it's boring, it's benign sort of a period in terms of bad and doubtful debts cycle. That could change obviously, and the capital ratio is well above what's required. That gives them $3 billion or there of excess capital that can potentially, blackmail investors into staying there, and that's basically why you're in there. Besides that, the earnings growth story really will come with the next big upcycle, but I believe you can play that through many other ways because this is already well owned. So the question is, if I sit in front of my clients and go, I've got an Australian portfolio and I'll talk about the banks and CSL, you should ask me to leave. Actually,
in saying that, I'm pretty happy to buy CSL now.
Oh, let's not go there.
I used to get bashed on social media because when I'm over 300 to put a sell.
Yeah.
But now when I say it's like quiet.
So, Zach, if you
Neutral.
hold it
Yeah,
neutral, would you
neutral.
be taking just
Yeah,
profits? along
profits along the way. That's what we're doing.
Yeah.
We're underweight, slight underweight because of the relative game. But yeah,
All right, well, that
all
is
it
the
is.
view from both. Taking profits along the way. Our stock of the day, Westpac.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at ig.com.